Hello, fellow stock investors. My name is Grant Gelati. I run a stock investing club. It's called the BTMA Wealth Builders Club, and some of my clients ask me questions. Often questions are about how do I pick the appropriate price to buy at. And I just want to explain to them that there is no person that can predict at what price you should buy at. Nobody knows what the market's going to do tomorrow. And nobody knows what this particular stock is going to do in regards to its stock price performance. So trying to predict the price of a stock can be a dangerous game because it's not really possible. What you can do is take factual information that you have and then decide on what price that you're willing to buy the stock at. So to do this, I usually take the estimated price of stock, or estimated value actually, and I do this by looking at around 10 years of factual data of the stock and the performance. And I use Benjamin Graham's intrinsic value formula to figure out what the estimated value of the stock is. Then I add a margin of safety to that price just to make sure that I'm reducing my risk by not overpaying for the stock. To do this, you can use a stock analyzer. I recommend our own personal product. It's a BTMA stock spreadsheet, and you can get a free version that does exactly that. It'll give you an estimated value for a stock, and it'll also add the margin of safety for you. It'll tell you what are the good companies to buy at bargain prices for each day. So like I said, there's a free version. I'll put a link up for that. So once you get the estimated value of the stock and you add the margin of safety to it, the next thing you want to do is you're going to have a price that you're willing to pay. But this price does not account for the current situation with the stock and what's affecting the stock price today. So you also have to look at these factors of what's affecting the stock price today. So I like to look at a 2-year stock price range. Just go to Yahoo Finance or Yahoo Charts and look up the 2-year chart and see what the price movement of the stock is. Is it going up? Had it gone up and peaked and then it fell off quickly? What is the base price at? So in other words, maybe the stock goes up and falls and up and falls and up and falls, and it always falls around $50, let's say. Then you're going to take that as a base price that you might be interested in offering for this stock. I always try to buy a stock when it's around its 52-week low. And oftentimes I'll offer a ridiculously low price just in hopes that I can really reduce my risk and increase my gains. So even if my offer is not accepted, it's okay. I just move on and I find another good bargain the next day. So don't worry about losing out on the deal of the century, because tomorrow there'll be another deal of the century. So find out what a base price is, what the lowest price that you think is possible that you can buy this stock. And then you're going to offer even lower, okay, with hopes that your limit order gets satisfied. I always use a limit order. I don't buy at the market price. I don't pay market price. So you always want to lowball the stock price, because every day the stock prices go up and down, and it doesn't really mean that's the value of the stock. So just offer the lowest price possible that you think you can deal with. So that's what I did recently with Harley Davidson. I looked at the stock price. I knew it was a good company at a bargain price according to the BTMA stock spreadsheet. And then I added the margin of safety, which was also done for me through the stock spreadsheet. And then I looked at the factors that are affecting the company today. And the stock price had been going up and down. It kind of peaked and then it went down. But the base price was around $55. I decided to offer a limit order price at $46.97. The reason why I went so low was because there were a lot of negative factors affecting the stock today. For example, Harley Davidson had been performing poorly over the past year, so I took that into consideration. The US dollar was strong, so that was another affecting factor that was negative on their sales internationally, because people could afford to, or couldn't afford to buy a Harley Davidson because the dollar was so strong. Other factors affecting the stock price were that Harley Davidson has to come up with new research and development, new innovation every year, a new product design, these kinds of things, and they cost money. So compare this kind of company to a company like Coca-Cola. Coca-Cola makes the same product. They've been making the same product for years, the same cola. They use the same manufacturing. They use the same setup. They don't have to change the recipe. They don't have to spend a lot of money for research and development of the product. So therefore, their profit margins could be higher, and they don't have to worry about these costs. But with Harley Davidson, they have all these extra costs, so their profit margin could be lower. So I take that in consideration with this kind of company too. It's not the ideal kind of company for me to buy. But the thing I liked about Harley Davidson is that they have a very loyal fan base. And people that are Harley Davidson fans will continue to buy Harley Davidson for years to come. People have Harley Davidson tattoos. I mean, it's a part of who they are and their culture. So this is one kind of dominant factor that they have a competitive advantage. So I did like that about Harley. But I had all these other negative things affecting the stock price today. So I decided to offer a very low price. The other thing, the last thing that I was concerned about was that the earnings report was going to be announced that day, later that day. So when I found out Harley was going to announce its earnings, I had figured with all this bad stuff that was happening in the past year that Harley Davidson might be low on their earnings. So they weren't going to meet the estimates. So if a company's not going to meet their earnings estimates, usually the price will fall. And sometimes it falls very significantly. And that's what happened with Harley. I set the very low price, $46.97. The price was, I don't remember exactly what it was, but maybe around 55, 56, something like that. They announced their earnings. They had poor earnings results. They didn't meet the earnings. Stock fell 15%. I bought at my limit order price. I wasn't watching the market or anything. It hit that price. It just sold automatically. I had made that decision even before. So I'm taking my emotions out of the buying. I just set the limit order and I forget about it. This is the price I want to buy it. That's it. Hit that price. And now I have the stock at what I think is an even better bargain price. I reduce my risk and I can increase my chances of greater profits by buying at such a low price. So now I will set my limit order to sell the stock. So I'll sell Harley Davidson at a price that I think I am willing to get a gain for it. For example, maybe 5% is the price that I want to get. So I'll set the limit order for 5% above the price that I bought it at. Again, I'll just set the limit order and I'll forget about it. And when it sells, it sells. I don't buy on impulse. I don't sell on impulse. And then I just go and do the same thing with another stock. So in summary, don't try to predict the market. Don't try to predict what a stock price is going to hit, that you could buy the perfect bottoming out price, because nobody could do that. You might get lucky sometimes, but it's not possible for us to do that. Even Warren Buffett says that he can't do it. The next thing is you want to take an estimated value. You want to base this on factual data for a long period of time. You want to add a margin of safety. And then you want to look at today's current factors that are affecting the stock price, and you want to consider those. So putting all those factors together, then you take your emotions out of the buying and selling and you set a limit order. Forget about it. Let it buy or sell at that price. And then you just rinse and repeat the process. Hope this information is helpful for you. I know that I get good positive feedback about this kind of solution with my Wealth Builder Club members. If you're interested in checking out that free BTMA stock spreadsheet, I'll post it in the video and in the video description, and also the Wealth Builders Club if you want to check that out. Have a great day.